Good day, traders, and welcome to the premium video newsletter for June 24th, 2013. Before we get into the technicals, let's discuss some international fundamental news. Before trading began Monday on Wall Street, China's main stock exchange had its biggest loss in 4 years, and the selling spread to Europe. China's Shanghai Composite Index fell 5%. Prompted by government crackdown on off-balance sheet lending, which made investors worry about Chinese economic growth. This fueled further selling in the U.S. stock market at the open. Since starting its bull run in March 2009, the S&P 500 has had 6 pullbacks of between 5 and 9% and 2 corrections. So far, the market has come back stronger from each pullback. Technically, the stock market is not, I repeat not, oversold just yet. The RSI is still above 30 and typically moves near the 20 level when markets are oversold. I anticipate further selling after a correction to the upside that may last a few days. So expect a bounce to the upside. I believe there are some important price levels that you should look at for the S&P index. These are 1540, which is the very near-term support level for the S&P 500. I believe we will see some congestion or maybe even a small rally near these levels. However, if the market does break this level, I do believe it will, the next price level will be at the 1485 level. This is the most dangerous price level, so pay attention to it because if we break this level, the next level is the 1400 level. And this is where we started the year. If the market comes near this level, the stock market will go negative for the year, and this will cause very sharp increase in interest rates. For now, I anticipate a slowdown of the selling and some buying coming in till at least Thursday of this week. Monday's selling also showed up in the U.S. government bond market, where the yield on the 10-year Treasury note rose from 2.5% on Friday to as high as 2.67% in intraday trading today, the highest levels in almost 2 years. The market fell back and closed at 2.53% in the afternoon. The yield has surged from its low in 2013 of 1.63%, which occurred only about 6 to 7 weeks ago on May 3rd. This increase accelerated last week after the Federal Reserve laid out its possible timetable for curtailing its bond buying program. Looking at the 10-year futures chart, the market sold off at the beginning of the day, but came back towards the end of the session. The 10-year futures has been oversold the last 2 trading sessions, and it's beginning to reflect in the price. I'm anticipating some buying coming into this market in the next day or two. If you're short the bond futures or stocks that are highly correlated to bond futures, I highly recommend you liquidate the position for the next few days because the pullback is more than likely. Looking at our existing position, PFE Pfizer finally broke down as expected today. Better late than ever. Keep your limit buy order at 27 and I'm hoping it will stay weak during the next few days. Watch the relative strength of this stock very carefully. The other open position we're currently holding is POR, and I'm still holding this position short. The reason why I'm still holding this position short in light of the possible rally in the US stock market is because the stock barely had any sell-off during a major sell-off in the US stock market. The correlation between this stock and the stock market is not overly big. So as long as we don't see a strong rally fueled by fund accumulation in this stock, I'm comfortable with holding it during a potential short-term stock market rally. Looking at my setups today, there are over 24 tail gap reversal signals to the upside. This suggests that many stocks in many different sectors gapped down today and closed in the upper, I repeat, upper 20% of the trading range. This further suggests that a short-term rally will be headed our way in the next day or two. Watch the following companies for tail gap setups to the long side tomorrow. I picked only 2 stocks out of the entire group And the reason why I picked only two stocks is because they were the only two that had a major trend that was still moving upwards. The rest of the reversals had a long-term downtrend, and you know I don't trade against the major trend. The first stock is ticker BWA, stands for Borg Warner. The company makes engine parts for larger car manufacturers such as Ford, GM, and Volkswagen. Purchase on a buy stop at 82.70, and if filled, place a protective sell stop at 80.25. The other stock we chose is Yum, which is the biggest fast food restaurant company in the US. They include chains such as Taco Bell, KFC, and Pizza Hut. Buy on a stop if the market trades at 68.60 and place a protective stop loss if the stock is filled at 67 even. These are short-term trades, so I do not want you to risk too much, especially in light of the current stock market condition and its uncertainty. That's it for today. I will update you tonight if something urgent is happening or tomorrow morning at the latest. Have a great evening, everyone.